You mentioned the decline in commodities prices.
Yeah, no one's even talking about it.
It's oil, it's wheat, it's copper.
Oh, corn, it's aluminum, it's soy.
And I would add to that the decline we've seen in Treasury yields on top of that, from 3.49 all the way down to almost 3% on the 10-year.
Okay, so this is very important. We have seen a move in everything from, say, a Coinbase to a Roblox to even things like, we've had DocuSign has started to come out. And these are all off the 3-year. It's the 3-year and the 2-year. Everyone talks about the 10-year. People have to stop. They have to start focusing on things that really compete with stocks. So what I see is an incredibly positive scenario that almost indicates to me that there may be some sort of truce talk that we don't know about. Actually, we do know. Actually, we do know about it.
I don't know.
I've been working hard on this.
What are you seeing?
Yeah, it's possible.
Really? Because a lot of people think it could just be that the market is starting to process in recession.
Well, I think the market is trying to process in a truce. And,
that would be good news.
Yeah. Well, no, yes and no. I mean, it's good news if you think that it's okay that Zelensky has to give up the East in return for recognition by the EU and perhaps even, although I doubt, NATO. No one's talking about the truce. No one's talking about the commodity decline other than you, which, by the way, is astonishing. And it's not nat gas. People say not. It's everything. We ought to put up corn and wheat. And look at Agco. Look at Deere. This is a remarkable decline. That if we were advancing as much, Sarah, we would all be frightened to death. Instead, Jay Powell is winning. He's not winning on wage inflation yet. But that's next.
Not yet, although in the FedEx earnings call yesterday, there was a mention that while wage rates, I think the exact line, are higher than they were last year, they are moderating. FedEx was a big clue on the economy and on earnings. If everyone's expecting earnings to fall here and we haven't seen the estimates go down, I don't know, FedEx the guidance was better than expected. We
are starting to de-risk. We're de-risking the software companies. I spent a lot of time with Brett Taylor and Mark Benioff yesterday. And of course, you know, co-CEOs of Salesforce. Very bullish. Now, one of the things that's happening that I think is just shocking, you're from Cincinnati.
I am.
I knew that.
Proudly.
I knew that. It's like I even know the coordinates because of Kroger's thing. But people are moving. There are companies taking advantage of this work from home, going to Ohio, Atlanta. That's going to bring down the cost of engineers because they're taking them in places where there's no job hop. This is an anti-job hop moment. So, Sarah, we can sit here and just woe is me about inflation, or we can recognize the total collapse of oil, the amazing decline in things like copper,
disinflationary.
Aluminum. Yeah, so, I mean...
And also what I think is important about it is that the market has ignored this week the very hawkish Fed talk. We had Michelle Bowman this week. A governor never talks endorsing a 75 basis point hike next time. We had Waller endorsing 75. That's hawkish because Powell said we might go 50, we might go 75. And the market appears to be ignoring that and saying, okay, what we're seeing in the commodity markets, in the bond market, in the dollar, which has started weakening,
the dollar weakening. Come on, the dollar was amazing. Where's the dollar versus the yen? When the yen was, I mean, we all should have gone to where my father was stationed, Kyoto. They were apparently giving the stuff away for the dollar. Now, another thing that we have to be very appreciative of, look at the autos. They've been crushed because of semis and because of raw costs. Well, the semi market has definitely loosened. The raw costs have come down big. The demand is still there because of work from home, needing cars. Sarah, I don't want to paint too positive a picture because we don't have wage inflation totally under control. But these people who are calling for 3 quarters, what data are they looking at? What data?
The last inflation report.
Well, I mean, they want to be data dependent. They ought to look at the futures markets. The oil collapse is stunning. I mean, I'm looking at the stocks and thinking for my Travel Trust, you know, do you go in and buy some of these? They seem to have no floor, even though some of them are yielding 9, 10, 11, 12. And with rates going down, they should be attractive. But I'm seeing, as you are seeing, something that no one's talking about. The disintegration of the commodities market, just when these Fed people are talking 3 quarters.